Good evening, I'm Christopher Nathan.
And I'm Michael Rose.
Breaking news tonight with further development on the Stanford Financial Group scandal.
Earlier today, on February the 14th, 2013, both Gilbert Lopez, the former Chief Accounting Officer, and Mark Kurtz, the former Global Controller of Stanford Financial Group, were each sentenced to 20 years in prison regarding 1 count to commit wire fraud and 9 counts of wire fraud. They are also to serve 3 years of supervised release, and Lopez was fined $25,000.
Both convictions were in connection to the Ponzi scheme of 2009, in which Stanford Financial Group defrauded nearly 30,000 people from 113 countries for more than 20 years. Stanford's former CEO, Robert Stanford, was convicted last year to 110 years in a Central Florida prison and made to forfeit $5.9 billion and a further $330 million on the jury finding the 29 offshore financial accounts.
Stanford Financial Group employed the fraudulent Ponzi scheme made famous by Charles Ponzi, in which, by year-end 2008, they sold 8 billion self-styled certificates of deposits, claiming that they had similar risk elements to instruments used by the US banks.
They were able to conceal their fraudulent activities and maintain the flow of investor money by fabricating the performance of the bank's investment portfolio. Stanford and Davis decided on a predetermined return on investments and used this for internal accountants to reverse engineer the bank's financial statements to report investment incomes that the bank didn't actually earn.
Investors frequently inquired about the safeguarding and monitoring of its assets. Pendergast Holt told them there was a group of money managers and a team of analysts monitoring their investment assets. However, they only managed 10% of Stanford's portfolio.
In an interview with James Davis, who was accused by Stanford himself of being the main perpetrator of the fraud, he claimed that Stanford, quote, emotionally bullied me and forced me to lie and cheat investors and make me keep secrets from everyone, including my wife. He further says, Stanford is a manipulative dictator who is quick to compliment but quicker to lash out.
In an interview with Layla Weidler, a former employee of Stanford until her wrongful termination in 2002, she says, all of this could have been avoided if proper protocols had been followed. I sent a letter to the SEC in 2003 informing them that the company was the subject of a lingering corporate fraud perpetrated as a massive Ponzi scheme that will destroy the life savings of many. She went on to say, the auditors failed to correctly identify the mismanagement of investment assets.
We'll be bringing further development on this story as and when they come in.
In other news,